Okay, hello, welcome to another trade review. So today, simply looking at a trade that I take during the 23rd of July. Okay, so entry was taken at the fair value gap with the 950 macro. So doing pre-market, we have pre-market sell side, pre-market buy side taken, and yeah, basically short-term highs taken. Then we have this market structure shift, and then just using this fair value gap as an entry, and right there you can see that I was using the price quadrant level, the opening range quadrant level, to actually take the setup. So very nice expansion we have during 950 macro. This one balance price range, so I shift my stop loss a bit lower right here, and then notice that my silver bullet entry was actually above was actually slightly below this emergent fair gap. That is why my first stop was placed here. So it was a trade based on this emergent fair value gap, this fair value gap, and also the opening range and the high time frame confluence that I have. And there we go. Stop loss is shift lower because we do not need that price to trade. We do not need that swing high to be violated because this is a very nice bearish market structure with the context of a daily time frame confluence. Okay, so just want to see this, I guess, a balance price range, and boom, there we have it very nicely. So right now, do we see a swing high? That is what my main concern is, and we do have a swing high. So right now you can see that stop loss is shifted even lower because this is where we will expect speed and expansion, but price did not give us that. So I was just looking at that fair value gap because that have to act as a best price range. So you can see what I'm typing here. Yes, I got greedy, did offer 100 points, but then I basically did not take my profit at the low hanging fruit objective, which was the opening range low. So that is one mistake that I would say that I can do better in this trade because I can't take partial. So always low hanging fruit objectives is where we take partial, and since you can't take partial, you just got to just take the trade off. And this is another thing. The reason why I close the trade, even though I already shift the risk to very minuscule, this is another thing that I want to mention. Looking back, I wouldn't do that because if it stops me out, it's already zero risk. It's close to zero risk. So this is another thing that we are going to see why I wouldn't do that. Because number one, trade is managed based on the logic already. So if price just stops me out, risk is already very minuscule. And you can see right here, price actually did not even reach the stop loss. So even if it had stopped me out, I wouldn't lose anything also. And you can see prices move very nicely away from just short of 2 points from my initial entry stop loss. But anyways, my initial entry, it was a low risk entry. It was very beautiful low risk entry, and you can see price just left a swing high here, poked the upper quadrant of the opening range gap. No, I mean the lower quadrant of the opening range gap, which is very beautiful. Then we got this reaction right here. So what did I do? I basically just take an entry at the consequential encroachment of this CB. That's why I'm using that as an entry. Immediately I get back in because you got to get in sync with the market, since all along I was bearish anyways, and market start showing me the expansion that I was expecting. So right now I'm just looking at the new day opening gap. I want to see price use this new day opening gap and the new week opening gap, which clustered together. I want to see price just hold this, because this big CB that I use as an entry, that is going to be a catalyst for price to trade lower. And nice, that is exactly what I want to see. Nice expansion. And notice bodies. Where are the bodies? Bodies did not close outside of the CB, and then this was using price as an inversion fair value gap, so that it's very ideal. That's some what I want to see. Price giving me feedback of a sell program. And I'm just looking at the CB right here. I want to mention that since price done this and price straight back up, it was already signaling that it's going to be a high resistance run. That's the first. But then you can see this X and best price range breaks lower, price straight back up. Yes, there are deeper retracement than usual, than what we were expect in a low resistance run. So I already know that we are in a high resistance run. Then I have conviction and belief that the session bias is going to be bearish. So I just held on to the high resistance run trade, and doing if we were to trade high resistance run, there are a couple of rules we have to follow, because I'm entering expecting it to be a low resistance run, and it turns out to be a high resistance run. But then all this might be just time distortion, because we are just at 10:21. That's why I was waiting for time and doing time distortion. It's not recommendable to pull your stop loss to very tight. You want to allow price to breathe through. You want to allow price to just do its thing. And you can see multiple times it did trade against me. Just a little bit of heat, but still my eyes is focused on the clustering of new day opening gap and new week opening gap, because those are like order blocks. Okay, I want to see price just use that to trade lower, but not violate it. That is why you can see me drawing this candle out as an order block. As long as price stays below it, I'm fine. And you can see I did go to, okay, right at here. You might be thinking that, yeah, I'm probably scared that price is going to stop me out, but no, I was always looking at that. I was only looking at that order block, that inversion fair gap, and the opening range gap, and the new week opening gap, and the new day opening gap. And in 3 minutes, we have a very nice order block up close candle. So I was just looking at the mean threshold of it. I want to see price not leave a body there. That's what I want to see. And the balance price range, it did poke back in, but then it did accelerate lower again. This is exactly what we want to see. So we're close to the 10:30, which basically time usually use that and make the low or high of the new week opening gap. But in this case, since we are bearish, definitely it's going to make the high of the new of the morning session. And we can see right now we have very nice expansion. So just looking at ES right now, I want to see ES just show me some form of speed, weakness. So you can see right here, bodies, after prices leave here, we have this immediate rebalance, these two. We have buy side delivery, sell side delivery, then we have wick, long wick through. So I'm looking at that wick right now. I'm looking at this wick right now. And prices wick through again. So like I said, all these are characteristic of a high resistance run. Time distortion. So we are basically just waiting for time. And I was just looking at the bodies constantly. You can see higher bodies right here, higher bodies. Then right here we have bodies not even closing above this fair value gap that I was showing, that I highlighted here. So as long as price do this, I'm fine, because I know that it's going to be bearish movement, because the body is telling us the narrative, and you can see nice expansion right there. So I'm looking for a fair value gap to form, and that is going to be a breakaway gap. But then I took profit off the opening range low, because I cannot take any partial. So strive to be profitable, not be right, and we get a free ride. I know that it's going to trade towards this old first presented fair value gap. It's going to trade towards the old new week opening gaps, the daily lows. I know it's going to do that, but still, not going to be just looking to be right. you know. So I immediately use my demo account to just practice. Yep, so back like 70 points, I was writing there, exit at low hanging fruit objective, and it actually was a 100-point run. Is all this is just what it's meant to be. I'm trading with logic right now, and so right now we are looking at how price want to continue to trade lower, and can see this expansion right here. This expansion right here, trading back to the new day opening gap and new week opening gap. That is price just trading back to maybe a higher time frame premium, as you can see, because this is a 1 minute chart. So you can see I'm typing. That is why you take a low hanging fruit objective, because okay, let's say I did shorts here. Would I be comfortable against all this heat after it gave me the low hanging fruit objective? No, because if I do that, I'll be striving to be right but not be profitable. And the whole reason why I was always stuck in my drawdown is because I'm always very greedy. Not really greedy, but you don't take something when market offers you the opportunity to pay yourself, and when you can't even take partials. So that's a problem, because you'll be always right but not profitable, and that is the flaw I realized, and I fixed it immediately. But still you can see that price is still utilizing the new week opening gap and the new day opening gap to trade lower, which is very beautiful. I like that it left that short-term high right here. That is a signature of weakness, and it melt lower. And you can see I don't think we are done yet. Still, I believe it can go lower. Basically typing that for the 1050 macro. So still using my demo for practice, but I'm gonna say that I'm still contented, and I actually fuck it up earlier, but then mitigated in the second trade. So now just going to have a free ride. Okay, just going to study, practice with the demo, because say if in the future I'll be trading this again with live fund, what I would do. So that's basically what I'm doing after I secure a trade and I use the demo account for practice. Because and there we go, an entry, beautiful. So basically just using that big BC we had, using it as an inversion to trade lower. Because price basically just want to trade back to the new big opening gap, take up the short term high, take up the intermediate term high, and just leave a signature of weakness. It was actually just trading back to a 5 minute premium, then continues lower with the 1050 macro. So it's always time and price. So that's small CB, see price. As long as it holds price below it, it can go lower. Nice. Do we leave a swing high right here? Yes, we do. So right now, do we see price use this as an order block to trade lower? Nice. 1050. Do we start ripping lower? Beautiful. So there we go. Standard deviation of the opening range, 0.5 hit easily, 80 points there. Stop loss is shift. Just gonna show you guys the business. It's 22%. So it was a very good trade, but the only thing is, or which is the only thing that I would say a very good reminder is, always pay the trader whenever it gives you chance to do it. You pay the trader no matter what. Okay, so you can see this was my demo entry. This was the draw. This was the first entry. Everything was outlined beforehand. More than 300 points. Perfect. So here, immediate rebalance. This was the swing high that we left. And then this prices used in an order block, which is what I was seeing. Boom. Value gap. Trade back up to it. Melts lower. Reach the objective. Done for the day. Just like that. Well, all I can say is price ain't that random money, huh? So the only thing that I want to mention, which is very important, is always take a low hanging fruit objective. Here it did give me an opportunity to do so, taking at the opening range low. But then, what another thing I want to remind is, when I did shift my stop loss lower, there's no need for me to actually close the trade, because it's already ID type there. It's either my stop, which makes me don't lose anything, or either it trades lower. So it's actually a zero sum up game. It's actually that's one thing that I'm going to try to learn, since you cannot take partial. So if you want to get bigger runs, you have to make sure that you secure profit, or either you manage your risk. It's either you don't lose anything or you win something. So just make it a scenario like that, and I guess it'll be freaking awesome. Yeah, you can see a very good trade, very good lesson, and 10% of mine is pretty much coming, I guess. I'll see you guys in the next one.